Welcome to the Daily Business and Finance Show. GameStop and Chewy's market tumble, the Roaring Kitty lawsuit fallout, Tesla's shift from Wells Fargo's Magnificent Seven, AI predicted to boost tech stocks by 15%, Cassava Sciences' continued slide amid SEC probe, Morgan Stanley's safe havens amid S&P 500 fragility, stock market triumphs as Nasdaq, S&P, and Dow soar into the second half of 2024. Barclays' gloomy forecast for O'Reilly Automotive shakes auto parts sector. Goldman bullish on top U.S. telecoms and favorable wireless landscape, and Oppenheimer's composite hits excessive bullish levels. Stay tuned after the short ad break to delve deeper into these headlines. Keith Gill, also recognized as Roaring Kitty, is currently facing a class action lawsuit. The allegations are centered around securities fraud connected to the volatility of GameStop's share price. It is claimed that Gill orchestrated a pump-and-dump scheme involving GameStop call options and shares, leading to substantial investor losses. In other news, an obscure post followed by a Securities and Exchange Commission filing indicates that he possesses 9 million shares in the online retailer Chewy. Both GameStop and Chewy experienced over an 8% drop in their share prices.
Wells Fargo has included Tesla in its third-quarter tactical ideas list, anticipating a short-term drop. The company points to worries about a decrease in delivery growth due to diminished demand and lessened returns from price reductions. Wells Fargo's prediction for Tesla's fiscal year 2024 deliveries is 14% lower than the previous year and 13% under the consensus estimates. They also voice apprehension regarding the demand for Model 2 and the profit margin for a smaller, mass-market vehicle.
Predictions indicate a potential 15% increase in stock for technology powerhouses such as Apple, Google, Microsoft, Nvidia, and Meta platforms during the second half of this year. This surge is expected to be fueled by progress in the field of artificial intelligence, or AI. These insights come from Wedbush Securities. Analyst Dan Ives emphasizes the significant role of NVIDIA's GPU chips in driving this growth. He further warns that companies failing to keep pace with AI innovations may risk falling behind.
Cassava Sciences has received further details from the Securities and Exchange Commission, or SEC, regarding an active inquiry into their Alzheimer's drug research. Concurrently, the company is carrying out an internal probe. The SEC, along with the Department of Justice, are scrutinizing 2 high-ranking staff members. Additionally, a previous scientific consultant for Cassava is facing accusations of fraud due to manipulation of preliminary data.
Morgan Stanley Wealth Management advises investors to adopt a defensive strategy in the U.S. equity market, which is demonstrating signs of vulnerability despite a robust first half of 2024. The firm's chief investment officer, Lisa Chalette, suggests concentrating on sectors such as healthcare, industrials, aerospace and defense, selected power generation and grid infrastructure sectors, financials, and residential real estate investment trusts. In addition to this advice, she recommends an overweight position in Japanese equities, gold, hedge funds, and investment-grade credit. However, she cautions that traditional safe havens might not provide the expected security in light of Federal Reserve rate cuts.
On the initial trading day of the second half of the year, significant market averages concluded on a high note. The tech-centric Nasdaq Composite took the lead with an increase of 0.8%. The S&P 500 and Dow Jones Industrial Average followed suit, rising by 0.2% and 0.1% respectively. Out of 11 sectors, 5 finished higher, spearheaded by information technology and consumer discretionary sectors, while materials lagged behind as the worst performer. Treasury yields experienced an uptick with U.S. PMI manufacturing slightly falling short of June's expectations. In other news, AI chip startup Lightmatter has brought on board former NVIDIA executive Simona Jankowski to serve as CFO, forecasting a robust second half for tech stocks.
Stocks in the auto parts sector, with O'Reilly Automotive at the forefront, experienced a downturn on Monday. This was triggered by a cautionary statement from Barclays regarding slow growth in the do-it-yourself sector due to persistent demand issues. Analyst Seth Sigman revised his second quarter and annual predictions for O'Reilly downward, forecasting merely a 2% sales rise for the second quarter. O'Reilly's shares ended 3.8% down, while AutoZone and Advance Auto Parts also saw their stocks fall.
Goldman Sachs has begun analyzing AT&T, Verizon, and T-Mobile, assigning a buy rating to each. The bank's perspective is that the U.S. telecom industry is undergoing a transformation as operators concentrate on their primary business and competitive pressures lessen. Goldman anticipates robust growth for AT&T due to its fiber initiative and low rate of customer turnover. T-Mobile is projected to persist in expanding its market share, albeit at a reduced speed. Meanwhile, both revenue and free cash flow for Verizon are forecasted to increase over the forthcoming 18 months.
According to the Oppenheimer's OPCO bullish composite, investor sentiment has reached levels of excessive optimism. However, analysts maintain that this bullish momentum and seasonal factors justify the optimism. They anticipate a support level of 5260 for the S&P 500 index at its 50-day average and suggest there is potential for it to climb to 6,000 during an average bull cycle. Stocks such as Republic Services, Knife River Corporation, Meta Platforms, and Apple are among those highly rated by Oppenheimer. That's it for today on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep chasing your financial freedom. I'm Montgomery Jones.
And I'm Amalia Dupre. Let's part ways for now, until tomorrow arrives. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.